Good day, students. For this particular session, we'll be discussing accounting for corporation. These slides are taken from the internet, which I will share to you the link later on in our LMS. Okay, to start, let's define first what we mean by corporation. So corporation is an artificial being created by operation of law, having the right of succession, the powers, attribute, and properties expressly authorized by law or incident to its existence. This is taken out from the Corporation Code of the Philippines in Section 2. And one way in corporations raising new capital is by issuing stock or shares. You call it as more on equity financing, raising capital through issuance of ordinary or preference shares. So these two classes of shares, we will discuss more of this on the later part. And this one is less risky than debt financing, wherein in debt financing, you will issue, for example, bonds, notes, or mortgages. Less risky is the equity financing, in the sense that when you give out dividends, so this is the return on the capital for those who invested or for those who had purchased ordinary and preference shares, the dividends are not paid unless it is declared by the board of directors, meaning so that the corporation can give dividends to its shareholders or stockholders, it must be approved or declared by the board of directors. And when a company does not declare dividends, specifically cash dividends, the cash from the profitable operating activities of the corporation may be invested to finance expansion. Or a corporation may need the proceeds from an ordinary shares issuance to improve the balance between liabilities and shareholders' equity. So that is one of the ways, in which a corporation raises its capital. And as you can see, it's quite different if you compare this to partnership. Now let's talk about the attributes of a corporation. Actually, the attributes are found in the very meaning of a corporation. A corporation is an artificial being with a personality separate and apart from its individual shareholders and members. When you say artificial being, a corporation is a person but not natural person. Artificial person only because its existence is created by operation of law. And take note, it cannot come into existence by mere agreement of the parties. As in the case of business partnership, corporation require special authority or grant from the state, either by a special incorporation law that directly creates the corporation or by means of a general corporation law. Okay, to continue, again, we are still on the attributes of a corporation. It enjoys the right to succession. So a corporation has the capacity of continued existence subject to the period stated in the article of incorporation. The death, withdrawal, insolvency, or incapacity of the individual shareholders will not dissolve the corporation. Unlike partnership, this is one of the reason for dissolution of partnership. And the transfer of ownership of shares of stock does not dissolve the corporation. So this should be corporation. And it has the power, attributes, and properties expressly authorized by law or incident to its existence. Now, as to the right to succession or the life of a corporation, before the maximum of 50 years, and it is renewable for another 50 years. Now, we do have a somewhat like revision for this one during the time of President Duterte. I think it was to 2019, no? Wherein I think we will have another article for this one as to the revisions, wherein as of this time, we do now have a unlimited life of a corporation. So it is not limited up to 50 years only. And ownership of a corporation is divided into shares. Proprietorship in a corporation is divided into units known as shares of stocks. And management of the business is vested in what we call as the board of directors, or the BOD, elected by the stockholders or the shareholders. And the BOD is the governing body or the decision-making body of the corporation. So the BOD is the one who will manage and govern the operation of the corporation. And take note, they're elected by the stockholders or the shareholders. Now, if you're going to compare partnership as well as a corporation, you do have this comparison. If it is a partnership, it is formed by 2 or more persons. Corporation, it should be formed by 5 persons or more, but not more than 15. Okay, initially. And in a partnership, it starts with agreement among the partners. It may be formed orally, but in a corporation, take note that its existence should start, or the commencement of the life of a corporation starts with the issuance of the certificate of incorporation by SEC. So the very existence of a corporation is because of this certificate. Okay, it cannot be just formed orally. And as to its life, for partnership, the life is actually limited. So actually, this is not unlimited. This is wrong. The life of a partnership is limited, but as to corporation, you will have unlimited life. Then as to the shareholders' equity portion or the equity portion, transfer of equity of a partner needs the consent of the other partners. But in a corporation, shares can be transferred from one shareholder to another without getting the consent of the other shareholders. And in general, as to who will manage or govern the corporation, as well as partnership, so by nature, partner is an agent of the partnership. It means a partner is a representative of the whole partnership. But in a corporation, shareholders do not act as an agent of the corporation. So again, the governing body of the corporation, you call it as the board of directors. Okay, let's continue. Here are some of the advantages of forming a corporation. First, the corporation has the legal entity. So therefore, it has the legal capacity to act as a legal entity. Shareholders have limited liability, meaning you cannot go after the personal asset of the shareholders in the event corporation becomes insolvent or bankrupt. Okay, and then you have unpaid liabilities. Unlike a partnership, if the partnership will become insolvent, and then you will have a lot of liability from outside creditors. As long as you're a general partner, the creditors can run after your personal asset. But in a corporation, shareholders' liability is limited only up to his shares or the shares or stock he or she owns. And it has the continuity of existence. Again, you will have unlimited life. And shares of stock can be transferred without the consent of the other shareholders. And the management of a corporation is centralized in the board of directors, and shareholders are not general agent of the business, and a corporation has the greater ability to acquire additional funds. How about the disadvantage? Now, on the disadvantage of forming a corporation, basically, corporation is complicated to form as well as to manage. And you will have a greater degree of government control and supervision. As to its creation, it requires a relatively high cost of formation and operation. It is subject to a heavier taxation than other forms of business organization. I think the tax rate is between 30 to 35% if you're a corporation. And minority shareholders are subservient to the wishes of the majority. Minority meaning the shares of less than 51%. Okay, so you will be considered as the minority. In large corporations, management and control have been separate from ownership, and transferability of shares permit the uniting of incompatible and conflicting elements in one venture. So those are some of the disadvantages of a corporation. Now let's talk about the classes of corporation. So this is under section 3 of the Corporation Code. It is being classified as we have private and public corporation. No? As to private corporation, first we have stock corporation. So this corporation which have share capital divided into shares and are authorized to distribute to the holders of such shares dividends or allotments of the surplus profit on the basis of the shares held. That's stock corporation. Non-stock corporation, on the other hand, this is a corporation in which no part of its income is distributable as dividends to its members, trustees, or officers. Any profit a non-stock corporation may obtain as an incident to its operation shall, whenever necessary or proper, be used for the furtherance of the purpose for which the corporation was organized. Normally, corporations that are non-stock, so the purpose of which is more on charitable purposes, educational, religious, so you consider that as non-stock. For commercial corporation, like for businesses, example, that's the part of the stock corporation. Okay, again, as I mentioned, a non-stock corporation may be formed or organized for charitable, religious, educational, professional, cultural, recreation, fraternal, literary, scientific, social, or similar purposes. Other classification of corporations, if according to number of person, you have here corporation aggregate. So it means consisting of more than one corporator. Corporation sole or a special form of corporation usually associated with the clergy. So consists of only one member or corporator and these successors such as a bishop. It's more on the religious. According to nationality, we have domestic corporation organized under Philippine law, foreign corporation organized under foreign law. Again, still, according to whether for public or private purpose a corporation, I mentioned this a while ago. So public corporation formed for the government of a portion of the state, and private corporation created for private aim, benefit, or purpose. Now, according to whether for charitable purpose or not, we have what you call as ecclesiastical corporation. This is organized for religious purposes. Eleemosynary corporation for public charity. And the civil corporation for businesses or for profit. According to legal right to corporate existence, we have de jure and de facto corporation. De jure corporation, this is existing in fact and in law. It means this corporation have satisfied all the requirement of the SEC. It has given a certificate of incorporation. Okay? De facto, the word is defect or de facto corporation. It is existing in fact, but not in law, meaning maybe this corporation was not able to satisfy the requirement of SEC as to the documents to be submitted so that you will be given a particular certificate of incorporation. So that's the defect, de facto corporation. Then according to degree of public participation, you will have closed corporation. The share ownership is limited to selected person or member of a family not exceeding 20 person. That's a closed corporation. Open corporation, the share is available for subscription or purchase by any person or the general public as a whole. So most of the time, those listed in the Securities and Exchange Commission, so that's a public or open, no, that's not public corporation, it's open corporation. According to the relation to another corporation, so you have parent or holding corporation, and then subsidiary. So parent corporation, this is a corporation that is related to another corporation that it has the power to either direct or indirectly elect the majority of the directors of the subsidiary corporation. You call it as a parent corporation, wherein this corporation controls or has the power either directly or indirectly to govern another corporation. You call it as the subsidiary. Okay, so when you say subsidiary corporation, this is a corporation controlled by another corporation known as a parent corporation. Now, so that we can understand this relationship, parent and subsidiary, it is like if you're a San Miguel Corporation, and then San Miguel Corporation also owns Petron, and then also owns Pure Foods, no? So San Miguel Corporation is the parent, and then the parent has a direct control of its subsidiary. Kato kong gipang mention a while ago. Pure Foods, Petron, etc. So it means the parent has an ownership of more than 50%. Okay? In its subsidiary. That is why the parent can control either the operation or the financial aspect of the subsidiary. And these are the steps in creation of a corporation. First, you will have promotion. This is the process of bringing together the incorporators or the person interested in the business. Okay? Wherein this particular organization, you will have this requirement. This person who are interested in forming the corporation will have to at least subscribe 25% of the authorized share capital, and 25% of its total subscription must be paid. But I guess with the revision of the corporate code, this is no longer required. And again, we will have another slide for the revision or the revised corporation code. We'll discuss that one later on. And then you will have filing of the article of incorporation with SEC together with the treasurer's affidavit, statement of financial position, as to the payment of its subscription, certificate of bank deposit, certificate as to the name of the corporation, payment of the filing and publication fees, and issuance by the SEC of the certificate of incorporation. Once you are already issued with SEC certificate, then you can now start with your organization and the commencement of the business operation. Wherein, again, this is another requirement, formal organization requires the adoption of bylaw and the election of the board of directors and of the administrative officers. Now, with regards the incorporation, the one we have mentioned, wherein you have to have a bylaw, election of the board of directors, and of course the administrative officers. So this is the process. Verification from the records of the SEC that the proposed corporate name is not the same or similar to an existing corporation. And I think they do have a database for this one as to the names of all the registered corporation, like in the Philippines. Okay, you're not allowed to have the same name, no, if you're a corporation. And drafting and execution of the articles of incorporation by the incorporators. The person elected as temporary treasurer should execute an affidavit regarding the share capital subscribed and paid up. The treasurer should submit also a sworn statement of assets and liabilities of a corporation. Deposit by the treasurer of the cash paid for the share subscribed in the bank in the name of the treasurer, in trust for and to the credit of the corporation, and the bank is required to issue certificate of deposit. This is requirement by SEC. You have to have a treasurer, and you have to have a evidence as to the subscription of the actual subscription of the authorized shares. And it also includes taking of such other steps as are necessary to enable the corporation to transact legitimate business or accomplish a purpose for which it is created. Now, in section 22 of the Corporation Code, it states that if a corporation does not formally organize and commence its transaction within 2 years from the date of its incorporation, its corporate power shall cease and the corporation shall be deemed dissolved. Meaning 2 years after you have granted a certificate of incorporation, if you have not started any operation within 2 years, it is assumed that the corporation is dissolved. And if a corporation has commenced business but subsequently becomes continuously inoperative for a period of at least 5 years, the same shall be a ground for suspension or revocation for its certificate of incorporation. So that's under section 22. If at the start of your operation, so you have commenced for, let's say, 1 or 2 years, and then for the next 5 years, it is inoperative, that same shall be a ground for suspension or revocation of its certificate of incorporation. Next, let's talk about articles of incorporation. So this shall be filed to the Securities of Exchange Commission. So again, this part of formal organization of the corporation. In the Philippines, the general law which governs the creation of the private corporation is the Corporation Code of the Philippines. Section 14 provides that all corporations organized under this code shall file with SEC articles of incorporation in any of the official language duly signed and acknowledged by all of the incorporators. By the way, when you say incorporators, these are the person who originally forms the corporation, containing substantially the following matters except as otherwise prescribed by law or by special law. Take note that the articles of incorporation, according to section 14, will have this particular item or details. First, you have the name of the corporation, the purpose for which it is formed, the principal place of business, which must be within the Philippines, the term of the existence, so for how many years, the names, nationality, and residences of the incorporators, the number of directors or trustees, which shall not be less than 5 nor more than 15, and the names, nationalities, and residences of the person who shall act as directors or trustees until the first regular directors or trustees are elected and qualified. If it is a stock corporation, you should indicate in the articles of your incorporation your authorized share capital in pesos and the number of shares, which is or the number of shares into which it is divided. And in case of a par value share, the par value of each share, the names, nationality, and residences of the original subscriber, as well as the amount paid by each subscriber on his or her subscription. Now, in case of a no par value, so meaning you will not have a stated value on the face of the share or stock, you call it as no par value, the article needs only state such fact and the number of the shares into which said share capital is divided. If it is a non-stock corporation, the amount of its capital, the name of the incorporators, nationality, as well as the residences shall be put into the article of incorporation. Now let's talk about ByLaw. Again, this is one of the requirement which shall be filed to SEC aside from the article of incorporation. ByLaws are the rules of action adopted by the corporation for its internal government and for the government of its officers, shareholders, or members. The ByLaws shall be adopted within 1 month from the issuance of the certificate of incorporation by the SEC. Failure to file a code of ByLaws shall render the corporation liable for the revocation of its registration. So ByLaws will have the internal government, your policy, how do you elect officers, how do you elect BOD. So it should be stated in the ByLaw. It shall be filed within 1 month from the issuance of the certificate of incorporation. Now, a private corporation may provide in its ByLaws the following. So the time, place, and manner of calling and conducting regular or special meeting, the time and manner of calling and conducting regular or special meetings of the shareholders or members, and the required quorum in meetings of shareholders or members, and the manner of voting therein. Now, as to voting, if you will allow also proxies in behalf of the shareholders, so you should indicate that in the ByLaw. And then you also have in the ByLaw the qualification, duties, and compensation of your board of directors, the trustees, officers, and the employees, the time for holding the annual election of directors, the manner of election or appointment, and the term of office of the officers other than the directors, the penalties for violation of the ByLaws, and in the case of stock corporation, the matter of or the manner of issuing its stock certificates. And then other matters as may be necessary for the proper or convenient transaction of its corporate and business affairs. Now let's talk about the right of a shareholder. Now again, you will become a shareholder if you subscribe to the shares of a corporation. So right to be issued certificate of stock or other evidence of share ownership and to transfer such shares. Another right of a shareholder is a right to attend and vote in person or by proxy at a shareholders meeting, and the right to elect and remove directors, the right to adopt, amend, or repeal the bylaw, and the right to purchase a portion of any new shares issued to maintain the same percentage of stock percentage. Meaning, if the corporation will amend or change its authorized capital, it will increase its authorized capital. The priority first for the increase in the authorized capital will be the old shareholders. Okay, so they do have the right to purchase a portion of any new shares issued to maintain the same percentage of stock. You call this particular right as the preemptive right. Okay, another right is to receive dividends when declared by the board of directors, and the right to inspect corporate books and records, and to receive financial reports, the right to participate in the distribution of corporate assets upon dissolution. And as to incorporators, again, these are shareholders or members mentioned in the articles of incorporation as originally forming and composing the corporation and are signatories to the articles of incorporation. Take note, they must be natural persons. Okay, now let's talk about the component of a corporation. First, you have the corporators. Corporators, these are those who compose a corporation, whether as shareholders or members at any time. So this term includes incorporator, shareholders, or member. Now, the question would be, can a partnership become a corporator? The answer is yes. Any person or entity can become a corporator. Okay? But as to incorporator, as I have mentioned a while ago, only natural person, okay, can become an incorporator. And also, you should be a subscriber of the share, no, of the corporation. Okay, and then to continue, the code specifies, the corporation code specifies that 5 or more person, not exceeding 15, may form a private corporation, provided that they are of legal age, and at least owners or subscriber of 1 share capital. Shareholders or stockholders. So these are corporators in a stock corporation. And take note, a corporator may be a natural or a juridical person. Members, these are the corporators of a non-stock corporation. You call it as members. Subscribers, these are the person who have agreed to take and pay for original and issued shares of a corporation formed or to be formed. Take note that all incorporators are subscribers, but a subscriber need not to be an incorporator. And then you have the promoters. These are the person who bring about or cause to bring about the formation and organization of the corporation. So basically, the promoters are the one who will form, no, the corporation, will facilitate in forming the corporation. Underwriters are usually investment bankers who have agreed alone or with others to buy at the stated terms an entire or a substantial part of an issue of securities. So basically, you call it as underwriters. They are the one who will sell the shares of a corporation. Okay? And let's talk about the classes of shares in general. So basically, you have two, par value shares, and the other one is no par value. Okay, let's talk about no par value later on. Let's have first par value shares. Par value shares are one in which a specific amount is fixed in the article of incorporation and appearing on the certificate of stock. The par value is the minimum issue price of the share. So let's say one share is 5 peso. So 5 peso, that's the par value. Okay? And take note, Section 6 of the Corporate Code states that preference shares of stock may be issued only as par value shares. So you also have two classes of shares of stock. You have ordinary share and preference. Now, as to preference share, it is only issued as par value. No par value is not allowed. Okay, you have here the minimum stated value of a no par value is 5 pesos. And take note, it is written in the corporate code. Now let's talk about no par value shares. These are one without any value appearing on the face of the certificate of stock. A no par value is allowed, and it may have what you call as the stated value or stated price, which may be fixed in the articles of the incorporation. Now let's proceed with voting shares and non-voting shares. So voting shares, these are shares issued with the right to vote. Normally, voting shares are ordinary shares. And this one, non-voting shares, those issued without the right to vote, normally these are preference shares. So let's talk about ordinary shares. So basically, they do have voting rights. So these are shares entitled the holder to an equal pro rata division of profit without any preference. So other term for this before is common stock or common share. You call it as ordinary share. This is a share wherein shareholder will have equal right over the profit of a corporation. The other one, preference share. So these shares entitle the holder to certain advantage or benefit over the holders of the ordinary shares. So basically, preference shares are preferred as to dividends first before it is given to ordinary shares. But then, preference shares is non-voting share. So they do not have the right to vote. Promotion shares. So these are issued to promoters as compensation in promoting the incorporation of a corporation. Treasury shares. So kani siya nga term, this particular term is a stock that has been issued by the corporation as fully paid and later reacquired but not retired. Meaning you have issued the shares of stock to a particular person, and then later on the corporation purchased that issued shares. You call it as treasury. And then you have convertible shares. So this is a stock or a share which is convertible or changeable from one class to another class. And then you have here authorized share. Maybe you cannot see it clearly. Authorized share or the authorized capital. This is the maximum number of shares which a corporation may issue. If you multiply that to the par value, you call it as the authorized share capital, the maximum value of your capital. If it is authorized share, the maximum number of share or stock which a corporation may issue. Now let's talk about issued shares. So these are shares issued to shareholders, which at present may or may not be in the hands of the shareholder. And you have unissued shares, shares which have never been issued and are available for issuance. Meaning, if you have, for example, a maximum of 10,000 shares, you call it as the authorized share. Now, if you have issued 50% of that, so 50%, that's 5,000, you call it as the issued shares. The remaining 5,000, that's your unissued. Now, for outstanding shares, basically, these are shares issued to shareholders or subscriber, whether fully or partially paid except for treasury. Now, to compute for this one, outstanding share, this is issued shares minus treasury share, that's outstanding share. So, shares that is actually on hand by the shareholders or actually issued to shareholders. And then you have subscribed shares, shares which investors have contracted to acquire. Now, you may refer to your book, no, for these definitions. Now, let's talk about the minimum subscription and paid-in capital of a corporation. Again, at the time of corporation or at the time of the incorporation, at least 25% of the authorized capital stock must be subscribed, and at least 25% of the total subscription must be paid upon. The balance to be payable on a date or date fixed in the contract of subscription without need of a call or in absence of a fixed date or date upon call for payment by the board of directors. This is the minimum requirement by SEC for a corporation. It should be that the incorporator will subscribe to 25% of its authorized capital, and 25% of the subscription must be actually paid. And I guess, again, we have a revision for this one. We'll just discuss that one later on. Let's continue. So you have here an explanation that in no case shall be the paid-up capital be less than 5 pesos. So take note that the requirement is mandatory. So to explain it further, we have here an example. Now suppose that a particular corporation will have an authorized share capital of 2 million divided into 20,000 shares with a par value of 100 per share. If you multiply 20,000 by 100, you will get this one, the authorized share capital. So the subscribed share capital must be 500,000, which is 25% of the authorized capital, and the paid-in capital must be 125,000, which is 25% of the subscribed share capital. Now suppose that the authorized share capital is only 60,000 divided into 6,000 with a 10 par value. Now the paid-in capital will only amount to 3,750. Take note, this is not allowed. So the incorporators must pay 5,000. Okay? Because again, as stated in our code, that the actual paid-in capital should not be less than 5,000. Okay? Now you have here the basic corporate organizational structure. Again, you have the shareholders who will have the ultimate control of the corporation, and they are the owners of a corporation. And the shareholders elect the members of the board of directors. The board of directors, these are the person elected by the shareholders who are responsible for the formulation of the overall policy for the corporation and for the exercise of the corporate power. And the board of directors will elect the chairman of the board. And then the president of a corporation must be a director of the corporation, but he cannot act as president and secretary or as president and treasury at the same time. So though he's a director, but then he cannot have this position like president at the same time secretary or president at the same time treasurer. You should have a segregation of duties. So the president is the only officer required by law to be a director. And the corporate secretary must be a resident and a citizen of the Philippines. So this is the requirement for a corporate secretary. He need not be a director unless required by corporate law. And then as to the corporate treasurer, this is the officer entrusted with the authority to receive and keep the money of the corporation and to disburse them as he may be authorized. He may or may not be a director. It is not a requirement, no, on the corporation code. Okay, and you have here the books that is maintained by the corporation. First, you have the subscription book. This is a book of printed blank subscription. So by the way, aside from the normal book of accounts like the ledger and the journal, these are also the additional book that a corporation, okay, must have. Again, you have the subscription book, book of printed blank subscription related to the issuance of shares, shareholders ledger. It is a ledger which details the number of shares issued to each shareholder. Subscribers ledger, it is a subsidiary ledger for the subscription receivable account. Stock certificate book, it is a book of printed blank certificates of stock. And this one, I'll just leave it as is. This is a sheet work. You do not need to do this one. Now, I think for now, as to our discussion about corporation, that would be all. If you will have any question or clarification, you can message in our GC or reserve those questions during our synchronous classes. Thank you for listening, and I think that would be all.